Hi everybody, it's Chris here from Serene Education, and I'm just going to be going over the forthcoming week's Forex Majors analysis from the 16th to the 21st of November 2014. So starting with the Euro against US dollar on our weekly, I just want to have a look and see what occurred this prior week and what we could expect going into the forthcoming week. So if you look at the hard right edge, and each one of these candles represents a week, you'll notice that the close of this week, let me just bring it up so you can see it. The close of this week, you can see that price was trading below the weekly fib level, which happened to be the level, the support level through October, the prior month of October. However, we saw the first week of November actually a spinning top and trading below that price support level here. And ideally, going forward, we needed to see price actually giving us an indication candle, because we don't trade an indecision candle. In this case, you can see that last week's candle was a spinning top. Even though price actually closed low, it was still indecisiveness. It was still bearish, but the indecision candle gave us no real clarity in the market, and we wanted to see the forthcoming week, or the week that's just finished, giving us that sentiment. And you can see that this week is just closed. And you'll notice that we have a scenario where price for the past week was trading lower. However, going into the close of this Friday past, which would have been the 14th, in fact, we saw price closing higher. So another spinning top, not a real genuine candle or sentiment candle. You can see it's an engulfing candle. It's slightly higher, and it's closed higher than the price support and resistance level. So you can see that price is actually it's hugging the weekly fib level here at the 23.6 level. That weekly level is represented here at 12,4970 and change, which is the 23.6 level. So we wanted price. We know that the euro against US dollar is still very much to the downside or weak. You can see that our indicator box over here is primarily telling us that the long-term sentiment is to the negatives, and the R-squared is complementing that negativity. However, intraday you can see a lot of bias to the upside, and this bias on the upside is primarily occurred after the figures that we had out on Friday. In fact, for the US dollar, we had some positive figures for euro to start with during the course of the morning. However, going into the US session, we had a lot of favorable figures for the US market in terms of core retail sales month-to-month figures. That was up from 0.01 as the previous figure, and the forecast actually came at a 0.03, so a 0.3% increase there. Retail sales month-to-month figures was also an increase from a negative 0.03 to a positive 0.03% level, and the prelim consumer sentiment figure was a lot higher than the forecast. The forecast was 87.3, and it came at 89.4. So we saw positive out of the US market, and subsequently that actually saw a slowdown on the euro side. So we've seen a consolidation, and ideally we want to see price moving to the downside. So if you're seeing a break low, especially a spinning top, we want to see a decisive candle. In this case, we're seeing negativity, so therefore we wanted to see this prior week that closed being more of a bearish engulfing candle to confirm that we were still looking for further shorting opportunities for the euro against a very strong US dollar. However, that was not the case, as we saw this indecisive candle, and most importantly, you can see that the euro actually moved higher against the prior week, and in doing so, it's closed higher than that weekly fib level here at the 23.6 level. So when we drop down to our daily time frame, you can see that most of last week, in fact, and the week before that, you can see a lot more action happening below the weekly fib level. So you can see October, these two vertical lines are indicating the monthly trading range, and you can see that October we saw a nice morning star formation, and price actually reverted back or consolidated back to the prior weekly fib level here at the 38.2 level, subsequently not making any new highs and subsequently falling back with long-term trend direction, which is to the downside. And then we saw going into November, we saw a bearish engulfing candle after indecision at the 23.6 level and price dropping lower. However, since then we've not seen going into the second week of November, we failed to see price actually holding on to that negativity that we saw in the first week of November and taking that forward to the downside. We do have a genuine target level here at the monthly fib level here, and that is just above the 12 or the 1200 level. So between that price support that we saw at the start of November to the monthly fib level below, we have in fact roughly 240 odd pips to that level, and it's about 2100 mark. So as I mentioned to you, we didn't see any further continuation or swing lows in that case. And going into our second week of November, we saw price actually consolidating under the weekly fib level here at that level I mentioned to you, which was roughly around the 1249.70 and change mark. Then Friday, we saw that move into the market, and subsequently that took us higher than that level. So we're seeing consolidation around the euro weekly fib level, and ideally if we want to see any further continuation in a bear trend, which is the case for the euro against the US dollar, we would need to see ideally price getting back below the 23.6 level, but most importantly forming a new swing low, and that would need to see a close at least below the 23.53 and 7 mark before we see any opportunities for further selling in the direction of the long-term trend. So we would need to see this week going into the third week of November, so the 16th through to the 21st, we would need to see the Monday, Tuesday, Wednesday, ideally the 17th onwards, we do need to see a close below the 12.3537 mark at least, to see if we can capture more of that negativity to the downside. Failure to see that occur, and we see price maintaining this consolidative range and price actually maintaining above the 23.6 this week, in fact, we would then ideally look for a further consolidation or pullback, and ideally we look towards a weekly prior fib level here at the 38.2, which is roughly around that 12.78 and change. So where price is trading right now to that level is in excess of 263 pips. We won't see all of that, but ideally we're looking in excess of a clear 200 pip pullback if we see price maintaining the current support level highs, and then we could see price moving back to that level. Ideally we would have to look at the following week's data, fundamental data, to see if there's anything there that would actually help euro move higher or help euro move lower on positive US dollar sentiment coming out of the following week. So look at the data, the fundamental data going into the following week, to see if there's anything there that can actually help price on either end. So that's vitally important. Moving on to sterling, here again we've seen a lot of negativity for sterling, in fact, and you can see last week's candle very much moving from the underside. As I mentioned to you from the video beforehand, we should have been looking for further selling opportunities as long as that 50% retracement stayed in place, and sure enough we saw a lot of negative news out for sterling, but also some fantastic figures for for US dollar, which helped push sterling lower. You can see that the institution moving average now is clearly being breached, and this is our second consecutive week with negativity or sterling trading below that institution moving average. You'll notice that the most important thing is we have the red arrow. The candlesticks are now red because we're trading below the institution moving average. We still continue to make swing lows. You can see the long-term sentiment on this chart, or most of the sentiment on this chart, primarily the long-term in particular, is still favoring further negativities, and the R-squared is complementing that. And so the last week, as I mentioned to you on the video, to start with, we should have been looking for selling pressure, a continuation of that selling pressure to the downside. We would have looked at this figure here, the 38.2 level being our target last week. It actually crashed straight through it. So now you can see the weekly candle has, in fact, the close of Friday night has closed lower than the 38.2 level here. So ideally what we want to see going into the new week is this 38.2 fib level here, actually now constituting as intraday resistance or daily resistance, therefore for price. Then we would expect a pullback of some sort, and then a continuation down towards that 23.6 level to the downside. That figure, if we can see the 30.2 here at 157176, as long as price can maintain below those levels, we should then look to see price continuing on our way to the downside. So if I drop down to the daily time frame now, you can see quite clearly that price has actually broken through. We saw Thursday the candle, Wednesday's bearish engulfing candle, confirming that we should still be looking for further negativity. You can see that the long-term trend is very much to the downside. Swing low is very much in favor. All our moving averages and the trend clearly moving with a lot of bearishness to the downside, and subsequently we should have been looking for further selling sentiment, as I mentioned to you. And you can see that Thursday's candle broke below that 38.2 level here at the 1571 and 76 and change. And then Friday, after the indecisive news for sterling, but also we saw a pullback and you can see that close on Friday night, sterling was still very much had closed below the 38.2 level. So going into the new week, we want the 38.2 level here at 15176 now to remain above price as a resistance. So if I look to the 4-hour time frame or hourly, etc., as long as price is capped by that weekly fib level at 30.2, then we look to see any continuations in the downside trend. So you could see here, still looking for negativity. Look to see if there's any data out for the following week that would ideally push a weaker sterling further to the downside. We clearly do have an objective. We do have a target below us. And if you look at where price is trading right now to that level, we're seeing that there's an excess of just short of 300 pips. So there's more than enough profit on the table here to make a decent return on time invested if and when we actually get a continuation in the direction of the long-term trend, which is to the downside. And that 23.6 level would be a vital target level for this particular pair as our next weekly projection. Moving on to the US dollar Swiss franc. So if we saw a weak euro against US dollar, then you would expect a change in market sentiment or a change or correlation change for the US dollar Swiss franc. They have this very strong correlation between the two of them, and you should see a very strong US dollar against the Swiss franc. And clearly that's what's been happening. However, you'll notice if I just pan in here to the hard right edge, you'll notice that last week's candle, the week before, we saw an indecision candle at a price support and resistance level high, which happened to be in the monthly fib level high here at the 76.4 level, which is the 0.969 level. So we wanted to see the prior, or this past week closing high, because the prior week's candle was indecisive at a major support and resistance level high. So we saw a spinning top at a major resistance level high. So therefore, last week's candle, we want to see a directional candle, a sentiment candle. We don't trade indecision, and if you're trading at a monthly major support and resistance level, as you can quite clearly see, price has had issues with in the past. This is going back to May of 2013. In fact, you can see near term here, we saw resistance going into the end of September. In fact, so, and then yet again through the first week of November, we saw an indecision candle at a major support and resistance level. So second week of November, we wanted to see a clear direction, and subsequently we saw a bearish engulfing candle after some indecisive news on the US dollar. You'll notice that the long-term sentiment is still primarily to the upside. You'll notice that the weekly candles, if you look over here, we still have a blue arrow. The candlesticks are still very much blue. The moving averages that we tend to look at are all still below price, supporting her. Our RMO is still above zero, which is a positive sign. Our OSMO is still very much above the zero level. However, in this consolidated range, you can see price not making any new highs and not making any new lows. You'll see that the OSMO is clearly dark green, which is telling us or confirming that price is not very much in a we're not seeing any bias to the upside, primarily because we're not getting that second extension high. So going forward, it is imperative, if this trend is still to be long-term positive, we would need to see the 76.4 level here at 9695 being breached. Okay, if we fail to see that happening for the foreseeable future, there's going to be less buying on the market and more selling contracts being taken on play, and that's going to force price even lower. And if it does tend to do that, then we could see price heading back towards that 78.6 level here at the 0.944 and change as our first target, and then back towards the major support and resistance level, or this major consolidation level, roughly around the 93.32 and change mark. You'll see there's a lot of consolidation over here, and that's going to start. That's going to bring, you can see where the fib levels are causing a lot of indecision in the market, because we're trading back within a very, very speculative range, consolidative range. So vitally important, we do need to see one or two things. So we drop down to the daily now. You can see that the daily over here, seeing a bit of negativity creeping into our indicator list here. The R-squared is still complementing overall the upside, but you'll see that price over the last week or so has failed to make any new highs, and that's now going to have a more it's going to have a negative effect on price moving higher. Because remember, if you are trading, you want to be making profit. Okay, so if you clearly move, if you're buying with long-term trend, then you want to see price making new highs to constitute that you're, for one, making profit, because you make the prices moving aggressively to the upside. But if you see them prices not making new highs, you're going to, at a major support and resistance level, which is clearly the case here at the 76.4 level at 96.95, you're going to start seeing those contracts, which were buying contracts, going to start, people are going to be, those traders going to start to close their accounts, therefore putting more selling bias on, or selling pressure on price moving any higher. You can see Friday's candle clearly closing lower than the range that we saw through Thursday, Wednesday, Tuesday, Monday, and Sunday evening. So if that's the case, we would like we could ideally see further pullbacks for price, depending on what the news is like for the forthcoming week. So there again, always look at the data to see if there's anything for the US dollar in terms of fundamental data that's coming out for the following week that's gonna help push US dollar higher again, or if we're going to see any US Swiss franc, the franc data that's likely to push price lower. Okay, so we ideally look at the data to see if there's anything else that is going to really help maintain price. We have FOMC statement meetings on Wednesday. In fact, we have PPI month-to-month figures out on a Tuesday. Thursday's another day where we have a lot of CPI month-to-month figures. We have unemployment claims for the US market. We also have the Philly Fed manufacturing index for the US market. So there's a lot of data for the US market, and looking at the data very, very quickly, they're expecting slight contraction in some of those figures. And if that is genuinely the case, then we could see further US dollar weakness if those figures are genuinely the same as the forecast, and we could see further pullbacks for the US dollar Swiss franc for the forthcoming week. So very, very important just to make sure that the data comes out. Got to be well aware of the data that's ideally coming out, and if it does come out in the direction of the forecast, then we could see further consolidation for the US dollar for the forthcoming week. Okay, so just remember that, guys, when looking to trade particular pairs, very, very, very vigilant on what the data, fundamental data, is coming out and how that reflects on price action going forward. Last pair I'm going to talk about is US dollar Swiss franc. You can see on the very, very strong US dollar and a very weak yen, you'd expect to see the US dollar making new highs. And you can see the past week, this is a monthly chart. You can see that this month, November, very much moving higher. So if we drop down to the weekly time frame, straight away I get a buy signal. And you can clearly see that the last 2 weeks, in fact, has seen further highs for the US dollar against a very weak yen cross. So as it stands at the moment now, we're seeing price heading towards a 38.2 level, just above the 119.31 and change mark. So looking at 119.985 to start with, and you can see it's a hesitation area that took place back in 2005. It's a long time ago, but you can see how clearly prices moves with price support and resistance levels, and this is clearly what's happening at the moment now. So our near-term target for November would be this 119.985 at the 38.2 monthly fib level, and if we drop down to our weekly time frame, it clearly is the case. You can see 38.2, 119 at the top here. You can see that on the weekly time frame, everything is telling us we should be looking to the bias to the upside. We have a blue arrow. Candlesticks are still very much blue. Even on the pullbacks, we saw blue candle, so it was just a consolidation in the direction of a long-term trend, which is upside, a bias bull trend. You can see the RMO is still very much above the zero level, and you can see RSMO is still making bright green histograms, which is telling us that that bias is still wanting to move higher. Dropping down to the daily time frame, here again we get a buy signal on the US dollar daily, and if you look at the daily indicator list over here, everything is still positive, and the R squared is complementing that buying sentiment. And you can see that we had a consolidation for Thursday, Wednesday, and Tuesday. In fact, price actually failed to make any new highs, but the data that came out on the Friday pushed the US dollar higher against the weak yen on those fundamental data outcome. And you can see we had a little consolidation breakout here, and because the candlesticks are still very much painted blue, our bias was still looking for breakouts to the upside, and clearly that US dollar data that came out on Friday was positive. Therefore, it would have a nice positive effect for the US dollar against a very weak yen, and clearly that's what's happened. So as it stands at the moment now, as long as price can maintain those highs we saw through Monday, Tuesday, and Wednesday. So that was Thursday, Wednesday, and Tuesday, apologies, above 115. Expect that now to form a nice support level, and as long as price maintains above those levels, look to see if we can actually buy with further bullish sentiment to the upside and target that 38.2 level here at 119 for the foreseeable future. So that's it, guys. Short and sweet. Just the four majors to apply good money management to any positions that you're likely to take this week, and just keep it as simple as possible. Trading is very, looking at charts is already mind-numbing. The last thing I'm going to do now is to add more analysis to your charts. So keep it as simple as possible. Make sure if you are trading or using the FX8 that you utilize it and use it to what it's required. It's a very mechanical approach. If you are interested in this particular platform, please get a hold of us at the email address posted at the end of this video. We could surely help you, push you in the direction, and send you the information that you require. So I'm going to leave you with that. I hope you have a fantastic week ahead, and most importantly, trade serenely.